Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Philip Morris International Inc. Annual Report. Philip Morris International Inc. is a leading tobacco company that has diversified its product offerings to cater to the evolving needs of consumers. The company's portfolio includes cigarettes, which are its core business, as well as smoke-free products such as heat-not-burn, vapor, and oral nicotine products under the IQOS and ZYN brands. In addition to these products, Philip Morris International also offers consumer accessories like lighters and matches, making it a one-stop shop for smokers. The company has further expanded its product line to include wellness and healthcare products, demonstrating its commitment to providing a comprehensive range of offerings to its customers. Overall, the company's diverse portfolio reflects its efforts to adapt to changing market trends and consumer preferences, positioning itself as a major player in the tobacco industry, while also venturing into related areas like wellness and healthcare. Unfortunately, I do not have access to the text you provided. However, I can provide a general essay on what could cause a stock price to increase. The stock price of Philip Morris International Inc. has increased significantly over the past year due to several factors. One major reason is the company's strong financial performance. Philip Morris International has consistently delivered robust earnings growth, driven by its successful tobacco business and strategic investments in emerging markets. Another key factor contributing to the stock price increase is the company's efforts to diversify its portfolio beyond traditional tobacco products. Philip Morris International has made significant strides in developing and marketing alternative nicotine-containing products, NCPS, such as e-cigarettes and heat-not-burn devices, which have gained popularity among consumers seeking reduced-risk alternatives. Additionally, the company's commitment to sustainability and social responsibility has also contributed to its stock price growth. Philip Morris International has set ambitious targets to reduce its environmental footprint and improve its social impact, which has resonated with investors and stakeholders alike. Furthermore, the company's strategic partnerships and collaborations have also helped drive its stock price upward. Philip Morris International has formed alliances with leading technology companies, such as Altria Group Inc., to develop innovative products and services that cater to changing consumer preferences. Lastly, the overall market conditions and investor sentiment have also played a role in driving up the company's stock price. The global economy has shown signs of recovery, and investors have become increasingly optimistic about the prospects for growth and profitability in the tobacco industry. Philip Morris International Inc. market capitalization of $285 billion is significantly larger than the average industry peer of roughly $3 billion. This shows that Philip Morris International Inc. holds a significant advantage in their industry. Philip Morris International Inc. trades at a lower price-to-earnings ratio of 25 times and a lower price-to-book ratio of -28.48 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The company exhibits a very high leverage profile, with liabilities accounting for 116% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 3.22%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for Philip Morris International, PMI, can be attributed to several key factors. The company has experienced significant growth in its smoke-free products, with notable increases across all regions. This growth is particularly pronounced in the U.S. smoke-free business, and in certain regions such as Europe and SSEA, CIS, and MEA. Additionally, PMI's combustible tobacco revenue has also seen growth in some regions. On the other hand, the primary drivers of revenue decline for PMI include various restructuring charges and litigation-related expenses. The company has incurred significant costs related to restructuring activities, including manufacturing footprint optimization in Germany and IQOS products sourcing for the U.S. market. Furthermore, PMI has faced negative impacts due to goodwill impairment charges, excise tax classification litigation charges, and sales tax charges in certain regions. Overall, while PMI's smoke-free products have driven revenue growth, the company continues to face challenges related to restructuring costs and litigation expenses. Net income experienced a significant fluctuation between 2023 and 2025. Initially, it decreased by $756 million from 2023 to 2024 due to various factors such as excise tax classification litigation charge and other items. However, in 2024, net income increased by 18% compared to 2023, primarily driven by the implementation of the RBH Canada plan, which included dividend income. This trend continued into 2025, with a further increase of 11% from 2024. The overall change in net income between 2023 and 2025 was an increase of $4,291 million. In contrast to the fluctuations in net income, profit margins showed a more consistent improvement. The net profit margin increased by 8.9% in 2024 compared to 2023, while operating income margin also saw a similar increase. However, it's worth noting that these improvements were largely offset by other factors such as cigarette tax increases and the shift towards mid-price or low-price cigarette categories. Additionally, the company faced challenges related to illicit product sales, uncertainty in SFP taxation rates, and changes in effective tax rates due to OECD space erosion and profit-shifting project. These external pressures may have contributed to the fluctuations in net income and profit margins over the period. The company's financial performance indicates a consistent generation of positive operating cash flow. According to the data, net cash provided by operating activities has been steadily increasing over the past 3 years, reaching $12,233 million in 2025 and $9,204 million in 2023. Furthermore, the operating cash flow for both 2025 and 2024 is reported as positive, with figures of $2,123 and $1,932 respectively. This trend suggests that the company has a strong ability to generate cash from its core operations, which is a crucial indicator of financial health. Overall, the evidence supports the conclusion that the company is indeed generating positive operating cash flow. The company's debt level has undergone significant changes over the past few years. Initially, it increased from $45.7 billion in 2024 to $48.8 billion in 2025 due to prepayment of €3 billion under the term loan facility in November 2024. However, this increase was short-lived, as the debt level decreased by $1.7 billion in 2025 due to the redemption of U.S. dollar notes. Furthermore, the debt level also decreased from $49,005 million to $48,667 million. In terms of interest expenses, there has been a notable decrease over the past few years. In 2025, interest expenses decreased by $177 million, or 15.5% compared to 2024, resulting in a net change of minus $177 million decrease from 2024 to 2025. This trend of decreasing interest expenses is consistent with the company's overall financial performance, indicating a reduction in its borrowing costs. Philip Morris International's PMI management is optimistic about the company's outlook and strategy. The key areas of focus include growing its smoke-free business, which is operating at scale across regions with an evolved organizational model in place. This shift aims to enhance agility and support PMI's journey towards becoming a smoke-free company. In terms of investments and acquisitions, PMI has strengthened its position through controlling interests in United Tobacco Company and the reacquisition of IQOS commercialization rights in the U.S. The company also expects significant growth from these investments. Financially, PMI is projecting net cash provided by operating activities to reach $13.5 billion in 2026, with plans to increase its quarterly dividend by 8.9% to $1.47 per common share. To mitigate risks, PMI employs derivative contracts and other strategies to manage exposure to foreign currency exchange rates, interest rates, and commodity price volatility. The company is also prepared to defend itself against pending litigation and regulatory challenges, but remains cautious about potential outcomes. Overall, PMI's management appears committed to driving growth through its smoke-free business while navigating the complexities of a rapidly changing industry landscape. The company has made several strategic acquisitions and divestitures over the years. In terms of acquisitions, the company acquired Swedish Match AB, a leader in oral nicotine delivery, in November 2022. Additionally, it acquired IQOS commercialization rights in the U.S. from Altria Group, Inc., and invested $30 million in a new production facility in western Ukraine. The company also expanded its portfolio by acquiring KT and G licensed brands, Fiat and Mix, outside of South Korea. Furthermore, it acquired IQOS commercialization rights in the U.S. for $2.8 billion on May 1, 2024. On the other hand, the company has made several divestitures as well. It sold Vectura Group Limited to Molex Asia Holdings Limited on December 31, 2024. The company also transferred shares in JSC TK Megapolis to its Russian subsidiaries and removed a foreign holding company from its shareholding structure. The deconsolidation of RBH was another significant divestiture made by the company as of March 22, 2019. These strategic moves demonstrate the company's efforts to expand its portfolio and streamline its operations. That concludes the financial summary for Philip Morris International Inc. Feel free to comment below, and I will be happy to answer them when possible.